Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A reactionary bullish long white Mariposa yesterday. That is an important pattern on a number of levels. First off, it was the first close above and outside one of the two forces that have been squeezing the market for weeks. The market closed above the combination of the upper tine, currently at 104.89, of the steep and more recent mid-February to end of March bearish Andrews pitchfork. This upper tine has been helped and abetted by the falling short moving average, currently 105.17. Now ideally I'd like a second consecutive close to confirm this move higher, but it does look very much as if the support below from the lower tine of the January, that's actually the support's at 103.47. As the lower tine of the January to May 2021 bearish Andrews pitchfork has broken the back of the other more recent and steeper bearish Andrews pitchfork. Additionally, the action over the last three sessions could be construed as a possible three-day bullish stick sandwich. That is something to watch out for. Further support is now available below from the previously mentioned 104.92 to 104.51 congestion zone, which contains within it the February and March 2017 lows at 104.92. We also have some light support at the April 2017 low at 105.68. Whilst overhead we have the 2020 low at 106.35 and the April 2020 low at 107.25. That's before the descending middle tine, currently 107.17 of the main January to May 2021 bearish Andrews pitchfork. So we have a potential rally in the offing. Please just remember this. It is a rally in a bear market, so its upside will be likely limited. Until the market can break the January to May bearish Andrews pitchfork, then it will run this market and run it overall lower. So far today, a dip down through the April 2017 low at 105.68, but not by much. Prices have seemingly stabilized around their opening and around this congestion level as well. Cable, aka sterling against the US dollar. An interesting pattern yesterday, a counter to the counter bullish opening white Mariposa, bullish piercing line pattern, and possible day 3 and a 3-day bullish stick sandwich pattern. That's a lot to take on just in one day, but that is what the market did. The market rose up from the newly constructed congestion zone from early last week and late the week before between 123.22 to 123.37 and back into the overhead congestion zone between 124.78 to 125.09, which contains within it the 38.2% Fibonacci line of the March 2020 to June 2021 move at 125.09. This zone had capped the rise earlier this week and did so again yesterday on a closing basis. Overall, we're seeing a halt to the recent moves lower from the late February to mid-April descending triangle pattern. The initial target X in the 126.55 area had already been achieved, and the harder secondary target X1 in the 123.60 area was achieved 2 Fridays ago. There is still a possible target X2 below on the 120 even area. This is a potential target for the mid-April to date action, being a possible bearish halfway hesitation. However, recent action has stymied this idea, and I'll retire it after today's commentary. So far today, well, not much. A move down to the support 124.36 and up into the congestion zone overhead between 124.78 and 125.09 and back to where we started. Euro sterling. An indecisive spinning top yesterday, though with a bit of a tail on it. The market is still cogitating over whether the recent breaks higher from the diamond pattern and the extended diamond pattern are real, genuine, or false breaks. What I can say is that the prices have not closed back below the break up over the upper trend line of the diamond pattern, currently at 84.26, and have made a second consecutive close over the upper trend line yesterday of the extended diamond pattern, and that's currently at 84.73. However, I am using some license in saying the first close was above the upper trend line here, as it was more on the upper trend line. Interestingly, the action yesterday saw prices drop down through the upper trend line as well as the April 2021 low at 84.70 and only halt and revert back upwards upon approach to the long moving average below, currently 84.43. So, just in case the market does make up its mind and move up from both diamond patterns, then on the upside we have the smaller lopsided diamond pattern, a primary target X in the 86.80 area, and a harder secondary target X1 in the 87.65 area. For the extended diamond pattern, we have a primary target X2 in the 87.15 area and a harder secondary target X3 in the 88 even area. There's one final pattern, it's a big one, on which this market has also sent mixed signals, mixed messages, to whether it is a false break or a real move. You see, I've spoken now for countless days, weeks and months even, of the very large falling wedge pattern, currently 84.73 to 81.67, which was still in operation, is still in operation, but which had fallen into the shadows of a little from the rising prominence of the diamond patterns. This pattern had been triggered, but has left us with questions. It has the most ambitious target of all on the upside. Target X5 for this pattern is in the 88.65 area. Though with this seeming fresh move higher, it may be finessed. I know it is a huge ask to look that high, but it seems these days to be the season to give huge asks right now. Now, so far today, a higher open and a small extension to the upside before coming back down to the upper trend line of the extended diamond pattern and near the congestion at 84.70. Right now, it is looking like a proto-bearish engulfing pattern in the offing. US dollar against the Indian rupee. Another complex and interesting pattern yesterday. It was a combined key reversal down, bearish opening long black Mariboto, and bearish engulfing pattern. It also killed off any opportunity for the last 3 days' action being seen as a bearish stick sandwich pattern. Instead, this area between about 77.40 to 77.80 is swiftly becoming a congestion area. Overall, prices are still in between the lower time below, currently at 76.87, and the middle time above, currently at 78.32 of the mid-January to early April bullish Andrews pitchfork. We still have an overhead target X in the 78.30 area. This is the potential target for the whole of the 2022 action, being a possible bullish halfway hesitation. In between there and where we are here, we have the previously mentioned middle time and also the upper trend line, currently 78.20 of the late August to date ascending, expanding wedge pattern. So that's currently at 78.20. So far today, a reactionary move back up with an ever so slightly higher open and looking right now like a possible combined bullish opening white Mariboto and bullish Harami. US dollar against the Brazilian real. An indeterminate pattern yesterday. On the one hand, it could be seen as a hammer pattern, usually a bullish pattern. On the other hand, it could also be seen as an immediate countering bearish double after the previous session's bullish thrusting pattern. We also saw a fresh close below the big 50% Fibonacci line of the October 2019 to May 2020 move at 496.58. Additionally, the market for once did try down to test the combination of the flatlining short-medium moving average, it's currently at 488.90, and the 2021 low at 489.08, though with inconclusive results. Further above, we have a small resistance congestion at 505.73 and 507.39, but the next significant resistance is the rapidly descending medium moving average, currently at 508.77. Overall, it continues to seem to be a limited appetite for any attempts higher. Final part, we're in between the upper time, currently at 514.27, and the middle time, currently 468.18. Of the start of 2020 to date bearish Andrews pitchfork, and I think that may play a bigger part in what's going on in a not too distant future. US dollar against the Mexican peso. An immediate countering bearish engulfing pattern yesterday after the previous session's key reversal up and bullish engulfing pattern. The top of the market was again defied by the lower trend line, or uptrend if you will, of the June to October 2021 descending triangle pattern, currently at 20.0570. Whilst the base was the attrition evidenced by the market moving down through the late March and April based double bottom congestion between about 2010 even down to about 1971.68 area. I've recently asked the question, is the mid-April today action a possible cat's ears pattern? Well, I think this has merit, and I'm minded to place Let's say a conservative target X below. Though the move down, should it happen, will probably extend that further. As it is a bit of a lopsided pattern, I've used the minimum size move possible for this. Thus, target X is in the 1954 even area. So far today, nothing. We're either side of the close and towards the upside as I speak. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investors International Limited. And here comes the final bit.